On today's episode, I want to take a quick look at Meta Platforms. This is a company that the stock price is down roughly 50% from its all-time highs, and there has been a lot of kind of negativity news happening here for Meta Platforms. Increased competition from likes of TikToks. We've also seen kind of a freezing in hiring at the moment, and some kind of talks of them kind of pulling back a little bit from kind of their metaverse push. All that I'm going to take a closer look in today's episode. I want to share my overall thoughts because I do believe there's a lot to discuss for this company. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now. All right, so for those not familiar, Meta Platforms, also known as Facebook, is traded under the ticker FB, currently sitting at around the 190 price point. If we take a quick look from its all-time highs, the stock is down about 49.98%, so pretty much 50%. This is insane. We can see in 2019 the stock also dropped nearly 40%. In 2020 it also dropped over 30%. So it is a company that has kind of seen these crazy swings in the past. But we are seeing a lot of stuff like this. Meta freezes hiring. And on May 18th, yesterday, there were reports that they're freezing hiring for their shopping team, their messenger for kids, and some other products. We saw earlier this week that Meta slows hiring for some positions as Reality Labs priority shifts. And for those not familiar with the Reality Labs, this is the department that's working with the virtual reality and the augmented reality. So a lot of people are saying, whoa, is this company kind of losing money at the moment? What's happening? Why it's taking this shift? I do want to say this is a company that was focused, especially here in the Reality Labs. I want to discuss that a little bit more. When they were focusing here in virtual reality and augmented reality, this is a very new kind of emerging technology. It's something new that not many companies have done. And kind of me being in the engineering field, I kind of have some experience of how working in emerging technology usually works. And the first thing is, when it's something recently new, you usually have a lot of small teams working on different projects, right? You have about 10, 15 projects working on the same kind of technology trend. Overall, what ends up happening is management or higher ups ends up picking around 3 to 5 of those kind of 15 projects. And they're like, okay, these 3 projects are the ones that we believe will work the best. So now instead of having 10 to 15 engineering teams, it's small engineering terms working on a variety of product, they kind of pinpoint on 3 to 4, they bring the engineering team together, and now they kind of spread them out amongst their group. And I do believe this is something that could be happening here with Virtual Reality Labs, where they're kind of focusing now on, they found the projects that they want to work on, and now they're focusing on that. As of right now, it does seem like Meta Platforms has no plans of laying off any personnel, but they are freezing kind of hiring. And they do mention that Meta has hired more engineers in Q1 of 2022 than all of 2021. Another thing that we are seeing is kind of increase of competition. For example, YouTube most recently on May 18th kind of showed some new products for their advertisement market and for their video market, right? So here they're teasing live streaming shopping expansion with things like co-streams and live redirects. So here they're just kind of increasing the solutions for their advertisement market, a market that obviously is where Facebook makes most of its money. Then you also have competition from TikTok, where it's kind of gearing up for games, including interactive mini games for TikTok Live. These are just reports at the moment, but still we can see 2 of the biggest players right now in the advertisement outside of Facebook are just increasing their solutions, which kind of just increase the overall kind of competition for this big player. I do want to say, in forms of all these negative news to some extent, nothing really freaks me out too much as an investor, right? I mentioned why the hiring and freezing and kind of the ending of some projects in their virtual reality labs doesn't really bother me too much, kind of coming from the engineering field. I've seen things like that happen before. Then with the overall kind of increased competition of TikTok and YouTube, these 2 have been players in this space. Especially YouTube. TikTok we know is fairly new, but again, these are companies that need to continue to improve their solutions because Facebook is actually doing the same. So obviously competition is bad for Facebook, but at the moment there's nothing that completely scares me off from this competition. I do want to kind of talk a little bit about Facebook's most recent earnings. I don't think I've done a video on them. And first we can see free cash flow. This is a company still making profits, right? Free cash flow was about $8.5 billion. That was a lot higher than same time last year, where it was about 7.8. So Facebook is not a company I would worry about financially anytime soon. They have over $40 billion in cash and very, very low debt. Their net incomes unfortunately did take a hit. They are down about 21% compared to same time last year. Last year they had about 9.5 billion in net income. Now they have about 7.5 billion. So they took about a $2 billion cut. But there has been a lot of macroeconomic changes that are happening. And during the earnings call, Mark Zuckerberg talked a lot about that. First, they're seeing kind of the big changes in the Apple iOS that continues to impact Facebook. The second is just overall macro trends like e-commerce slowing down right now. If with e-commerce slowing down, obviously they're going to slow down in advertisement. Other things are like the war in Ukraine. They had to stop advertisement in countries like Russia, and they're just kind of overall seeing a softness in this kind of e-commerce and kind of business world at the moment. Again, I do believe these are more kind of just volatile moves in the long term of things. Nothing to really worry me. I do believe this is just going to create more volatility for Facebook. Something else that they mentioned in their earnings is that they are reducing the amount of total expense they believe is going to occur in 2022. Before they believed it was going to be somewhere between 90 to 95 million. Now they believe it's about 87 to 92 billion. And this is something I do believe Facebook kind of went around the wrong way at first. So Facebook, when they first kind of said they were increasing all these expenses, they made it seem like all these expenses were going to go into virtual reality. And I do believe this is what, or the metaverse, the meta world. And this is what brought a lot of fear. I've talked about it a lot in this kind of channel, and I've kind of discussed how this kind of investments that they were going to increase was not just solely for the metaverse. It was also for artificial intelligence to just kind of increase their kind of advertising business. Like we saw, iOS took a huge hit for them. So they want to make sure that now they're able to kind of do advertisement with less and less data. So if something like that happens again, it won't really impact them. And this is something I want to say Facebook did really bad at kind of disclosing 2 quarters ago when they kind of shifted into Meta. But this year, in this quarter alone, they did mention that that's what they're going to do, right? They're making major AI investments. And this AI investment is just going to overall increase a few things. The recommendations of what people watch in Facebook and Instagram and other messengers, which is going to increase engagement. With increased engagement, it's also going to increase the amount of advertisements being hit. At the same time, they're also using that AI to kind of be able to kind of improve their advertisement and be able to provide better returns to advertisers. So all that is great in my opinion. They do say, and this is, I want to say another bullish thing, they do say that they were probably being a little too aggressive with Reality Labs at first, and now they're kind of shifting their move. First, they want to continue to grow in their family of apps business. And with that kind of growth there, they want to use that growth to fund the Reality Labs. So they want to continue to grow as a business. Great move. They believe 2022 might not be the best year for that because of all those macro events that we've discussed in the past. But overall, in the long term, they want to increase profits. So Meta Platforms, in my opinion, is sitting very attractive. I do like kind of the moves that they're doing. Their investments in artificial intelligence, I believe, is going to make them a big winner. In the short term of things, I do believe they have a lot of hurdle. I mean, TikTok is definitely a big competitor in this market right now. But I do believe right now, the way the engineering team is working, this is going to be a great investment over time. I don't mind purchasing at these levels, and maybe in the upcoming weeks, I probably will increase my overall position in Meta Platforms. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.